In my last video, I changed my opinion on gold and talked about a potential upcoming correction for gold, and more specifically the gold stocks who hadn't had a major correction yet for this new gold bull market. And it turns out the gold stocks did get smashed over the last couple weeks, with GDX and GDXJ falling over 20%, and some of the high flying gold stocks fell up to 30 and 40%. So we've seen a major correction in the first one for this bull market, but the question is what's going to happen next for gold and the gold stocks going forward? Looking at the daily chart of GLD, you can see that over the last 2 months, essentially, there's been a sideways consolidation, and the Brexit gap up has continued to hold, which originally I thought maybe this gap would get filled on a correction in gold, but it's held strong, which is actually pretty bullish. And one other thing to note is that the RSI is at its lowest level since the end of the May correction in gold, um, right here at the 40 level. And typically in strong bull markets, you see RSI readings around 40 on the 14 period daily RSI, kind of is a good bottoming location in markets that are trending higher. And one other thing to note on this chart is that gold really hasn't gotten severely overbought barely at all during this bull market so far, except for the initial surge into early February, where you had this high volume spike in the middle of February, which kind of ended the initial rally in gold. And it took 3 months for gold to work off that rally before it could continue rallying again during the next up leg. But this up leg terminated with only a reading barely above 70 on the RSI, and was actually likely due to some of the summer weakness in gold. It's kind of abnormal to see a June rally in gold. So we've worked off that overbought condition, and now after getting down to the 40 level, even though people are more apprehensive about gold right now, it's actually in a better position to launch another new rally. Looking at a chart of GDX, you can see that this, was the first major correction for GDX, and the RSI reading actually got below 30, which is actually kind of rare, for a bull market. And really, I think it's actually could turn out to be, you know, a really good buy point, given how oversold GDX was here in the straight down kind of correction this was. And notice that the volume in GDX last week, on the last 2 days of the week, you did 125 million shares on Thursday and over 100 million on Friday. And there's only a couple days this year that where the volume was larger than last week, and that was during the June jobs number, which really launched gold and the gold stocks higher, and then the Brexit vote back in June. Looking at GDXJ, we had two extremely high volume days at the end of last week, and these were only rivaled by that high volume June day. So it's important to see some really intense buying pressure come in at the end of this correction, which is pretty bullish for the gold stocks. Looking at a chart of, I like to go back to look at Tesla a lot because it's such a good textbook example of stage analysis. But after Tesla, launched into a new bull market back in April of 2013, it rallied for like 5 or 6 months, which is kind of exactly the same thing that the gold stocks just did. And we saw really the first major correction in the gold stocks over the last, half month or so. And notice how Tesla came down and tagged the 30-week moving average and actually almost got to the 50-week moving average. before its correction was over, and we saw some high volume selling days on Tesla. But notice how, since this was like the first major correction in Tesla's bull market, it really set the stage for the launch of the next major rally in Tesla over the next few months until it topped again around 260. So, if this is a new bull market in gold stocks, I would not be surprised at all for the next major rally to commence sooner than people would expect, because it's still early in the bull market. And here's one stock that I actually highlighted during one of my last recent videos, was First Majestic Silver, because it just hadn't had a major correction yet in its bull market, and it was actually pretty overbought and kind of ripe for to finally go back and retest that 30-week moving average, and it did last week. And the selling volume was humongous in this stock, and it lost over 40% of its value. So this is how the weak hands are shaken out in a bull market, and people that get in late where the market's too stretched from its moving average end up getting hurt. And this is why I like to take partial profits too, during rallies, because you don't get the chance to do that once the market goes into a correction mode. So now that First Majestic has gone and retested the 30-week moving average, it's really kind of cleared the deck and set the stage for the stock now to potentially continue its bull market higher now that this retest has happened. Looking at a weekly chart of GDXJ, we see the hammer candle that formed last week as a result of the bounce at the end of the week, and notice that the volume in GDXJ was the biggest volume we've seen so far in this ETF this year, which I think is pretty bullish, showing that there's a lot of buying pressure ready to come in and buy the dip in this ETF, because this was like basically the first big dip in this bull market. Looking at GDX, again, we saw a hammer candle. It actually did get down and retest that 30-week moving average, or just got really close to it. And again, the volume was the highest we've seen since March, really, when the bull market really initially kicked off. Looking at a weekly chart of GLD, again, GLD had a hammer candle last week. Volume really wasn't as good as on the gold stock ETFs, but the one thing that I've talked about previously too is that gold really hasn't been overbought even on a weekly basis for most of this bull market so far. So that's why, even though the gold stocks were due for a major correction, gold metal itself was just working off of its overbought condition over time and is really ripe for another rally at any point going forward, because it just hasn't gotten overbought. Which, when you see gold get really overbought, that's a good sign that you might see a longer term consolidation and a major correction in the gold stocks. Looking at SLV, we didn't really get a hammer candle last week, but we did get a kind of after that gap down the previous week in SLV, we actually closed that gap and closed right at the high of the week, which is actually really bullish for silver. And again, silver hasn't really gotten overbought like gold. So although the gold stocks have gotten considerably overbought, which made them ripe for a correction, gold and silver itself, really until they get super stretched, it's safer to kind of get back in these pullbacks, because overbought conditions are really where you set yourself up for pain if you stay in too long. Now, the one caveat to the precious metals continuing their rally going forward is that the US dollar is kind of at a interesting crossroads here where we've seen this like kind of stage 3 topping process play out in the US dollar for a year and a half now. But even though, the US dollar has been rallying since the Brexit vote and since about the middle of this year. So the question is, which way is the US dollar going to go going forward? Is it going to actually resume its rally from 2014, or is it going to top out and trend lower in a stage 4 bear market? It's really kind of right at the decision point right now. And if the US dollar was to continue its rally higher, it could put more pressure on commodities and maybe kind of cap out a significant move higher in gold for the near term. But on the converse of that, if the U.S. dollar continues to break down, we might see commodities, kind of finally move out of their stage 1 bases and continue into stage 2, and um, even like some of those lagging commodities might actually start moving higher as well. So this will be a good thing to watch for the precious metals bull market, and could really actually move the gold and silver markets into higher gear if they start to rise on the back of a weakening US dollar.